All right. Hello, everyone. So, we are trying something new today. Oh, there we go. So, I'm trying something new today, guys. I am going live on both YouTube and Instagram. So, that is what we are doing today. And I think I just lost where I was. Oh, there we go. All right, so we are going to get started. So, if you are new to this segment, I've been going live every week on YouTube, and I'm doing what I call a weekly recap. So, I kind of cover some of the main or major occurrences that happened this economy, in the stock market, or things that I believe are important when it comes to investing. And so I am trying something new. So hopefully the technology piece of this is going to work. So bear with me as we are trying this new thing. Okay. So first things first, let's talk about Capital One and Discover. So last month, they did receive the final approvals for Capital One to acquire Discover. So that was set to close essentially on, I'm getting an error message. Hopefully you guys can hear me and see me. Hold on, let me check myself while I'm here. Am I showing up live on Instagram? I don't think so. Let's see. Let's see. Okay. I am live on Instagram. Fantastic. And I believe I'm live on YouTube. Let's just double check. I'm just triple checking this. So I'm making sure that, okay, yep, I'm live everywhere. Okay, so let's get this show back on the road. So Capital One and Discover. So the sale was due to close on May 18th of this year, but now some of the Congress people from Elizabeth Warren and others are basically putting this at a halt. They're asking the Fed and regulators to reconsider their approval of this sale. So, what does that mean? Not too sure just yet, since we are only at May 9th. So, I'm not sure if the deal is going to still close on May 18th, or what is actually going to, what they are requesting is a formal reconsideration. And so, I'm not sure how long that process is going to take, but more than likely, this sale is not going to close out this month. So, for all of you Capital One customers who were really concerned about your credit cards and debit cards being transitioned over to the Discover network, you don't have to worry about that just yet, since nothing is going to be happening in the near future. So you can keep your cards, don't cancel them until further notice. Now, I do know when it comes to the actual stock prices, those have definitely increased in the last few months since Capital One received the earlier approvals. And then as they received more approvals, the stock price has continued to increase. So Wall Street's happy about this acquisition, but unfortunately, regulators believe that Capital One will have an unfair advantage in the market. Once this sale does go through, they will become the largest credit card issuer in the country. And they feel they will use that to kind of muscle their way into forcing customers, whether it's small businesses or low income customers, into paying certain rates and fees because they are the holder of all cards. So that is why some Congress people are asking the government to reconsider the approval and essentially not have this sale go through. I'm checking one thing. I feel like I'm not seeing anything from Instagram. So if you are on Instagram, if you could leave me a comment down below, that would be fantastic. So I can know that you can see me and you can hear me, because I'm not sure that everyone can. I look like I am live, but I'm not sure. I'm not sure. I think I am. So let me know in the comments that you can see me over on Instagram and YouTube. I believe I'm live on YouTube, so that part I'm good on, but Instagram, I'm not so sure. So moving on, the next major news that happened this week is a set of goods that are impacted by the newly imposed tariffs were delivered to the ports here in the US. So is going to essentially start to impact the prices of goods and services once they are on store shelves. And more importantly, we are going to see shortages as companies are placing smaller orders because of the tariffs. And I believe this is the one thing that many people weren't really thinking about. We've all been thinking about the price increases once tariffs are implemented, but I don't think many of us were thinking about the other implication of this, which is going to be these shortages. If companies are placing smaller orders, that means there will be less goods that will be available to put out on the shelves. And so essentially, you're going to have higher prices, but also less available items as well. So I know the ships that did come into the port here in LA, they were at 80% capacity. So they weren't even at full capacity like they normally are, again, because companies are placing smaller orders. Now, this is going to impact pricing for the foreseeable future until we kind of rehash this tariff conversation with all of the other countries. I have not heard of any updates. Now, when I'm talking about tariffs in this second, I'm talking about the tariffs on goods from China, since they were more severely impacted by the new tariffs that were implemented. Some of the tariffs are like 145%. So other countries do have lower rates in regards to tariffs, but China definitely was the most severely impacted. And as we all know, we do ship in so many things from China, and not just retailers, even small businesses, they will be the most impacted by this, as soon they won't be able to afford to import the things that they need to operate their businesses and to create their products and services. So we are going to see huge impacts in the upcoming months unless something drastic changes. So I know that a lot of people are now going out and they're panic buying, very similar to what we saw during COVID. So here we are 5 years later, and we might be back in the same boat once again with shortages, price hikes. You can't get access to things. So I would say now would be the time to try to stock up on some things, but don't overdo it, right? Don't go out and buy 20 things of toilet paper, right? Just buy a few extra for your house, but just don't go nuts, as that will further exacerbate the problem, as we saw during COVID. Now, if you do have any questions as we are going through today's conversation, feel free to put it in the comments. I believe I can see comments from both YouTube and Instagram here. So hopefully that's great and working. Now, if you're watching the replay and if you have any comments and questions, you too can also put them in the comment section, and I will come back and respond to your comments and or questions. So moving on. Now, what is interesting about what's happening this week with the tariffs is that we've seen that tariffs have negatively impacted the stock market. We've seen the stock market tank in the last 4 to 6 weeks or the last 30 days. But funny enough, the stock market did begin to rebound as of, end of last week going into this week, which is pretty interesting. But I think that's for a couple of reasons. I think people are not really feeling the impact of tariffs. So they feel a little bit more positive about the market. But now that those goods are here, that is definitely going to change. But I think the other reason why the markets are up right now is there have been many companies who had their earnings calls in the last 2 to 3 weeks, and they have had great results thus far. Now, of course, on these earnings calls, many companies are speaking about their position when it comes to tariffs, how they plan to handle it, and how they plan to brace themselves for what's ahead. And I will go to some examples later on in this live, but that is definitely the main thing that many investors are paying attention to. How are these organizations going to navigate going through another unprecedented time, as we saw, right, like during COVID? Next big thing that occurred this week is the infamous student loan conversation, right? So the government did make an announcement a couple of weeks ago that as of May 5th, they will begin to impose debt collection efforts on any student loan borrowers who were in default or in jeopardy of defaulting. Now, at the time this announcement was made, there were about 9 million people who fell into this category. I believe it was 5 million who were in default, meaning they haven't paid these loans like at all. And then there were an additional 4 million people who were not in default, but they were behind on some of their monthly payments, and they are kind of heading into that red zone of going into default. So what the government had advised all of those borrowers to do is to contact their loan providers and to work on getting those loans back on track or back in compliance, which is the word or the phrase they have been using. So they were recommending that students or former folks should sign up or apply for the income driven repayment plan, and this way they would make their monthly payments a lot cheaper, and in some cases the monthly payments would be zero. Now with this payment plan though, if you do make all of your payments for the entire time period allotted, once you get to the end of that time period, if there is a balance on your loan, that balance would be forgiven. But you need to sign up for that program to even qualify for what I am talking about. So the deadline was May 5th, which was this past Monday. And so now that that deadline has come and gone, they are now moving full steam ahead to impose debt collection efforts. So what does that mean? That means they're coming for their money, guys. If you haven't paid, they're coming for their money, hook or crook. So of course, the first way they plan to do that is to garnish your wages. So they will send out a court order or get a court order from the courts and then send that to your employer. And then one day you'll just see this garnishment in your weekly or monthly paycheck. That's the first way they plan to impose these debt collection efforts. The second way, they're going to start garnishing things like federal tax returns. In some cases, they may even intercept or garnish state tax returns, but that is kind of a gray area, but they definitely are coming after your federal returns. They also mentioned if you receive any other kind of benefit like SSI, that may be garnished as well. And so that is just like the first layer of defense they're using to begin to collect on these student loans, which is why it will be in your best interest to be proactive student loan provider, or just log on to your account and see what options are available to you. The sooner you can do that, the better it will be for you in the long run. And in some scenarios, in some cases, you may qualify for another forbearance or deferment. But again, you won't know until you actually, do the research and get the process started. I know myself personally, I was going live for the last 2 weeks, pretty much every single day on TikTok, just to remind people about their student loans, giving them information, answering questions. And so hopefully that did help some people. But now here we are. Now, what's making this conversation more interesting is the federal government is actually now relying on the colleges and universities to help them collect the student loan payments, which is crazy to say. So I did see an executive order that was that was published on the White House website, and they are now asking colleges and universities to follow up with their previous students to remind them about their student loans and making those payments. And here's what they're doing. They're giving the schools until June 30th of this year to send out these reminders, right, about their obligations to the student loans. And after that time period, what they're going to do is publish a report to show the default rate of student loans by the universities and the different colleges. Now, when I first saw that, I said, well, who cares about this report, right? If it's just a report, what does it matter? Here's why it matters. So apparently, if a school has a really high default rate, it will then disqualify them for federal funding and federal assistance. So this is definitely going to make things very, very interesting when it comes to how these colleges and universities will try to nudge their former students to pay the student loans. So we will see how that goes. I think that's kind of wild. The school already got their money, right? At this point, they don't really have um, a stake in this, but if it's going to impact their ability to receive federal funding, then it might, be in their best interest to at least make an attempt or show they made attempts. There's only so much a school can do, right? They've already received their money. You already received your degree or certificate. That business transaction has completed, right? And I haven't seen or heard how any of these schools have responded to this notice. So I think that as the weeks progress. So the next big thing that happened this week is the Federal Reserve did decide to not make any changes to interest rates, even though the current administration is pressuring them to lower interest rates. So when it comes to interest rates, this is how the economy can be kind of not guided, but it helps impact the economy. So as you increase interest rates, you can slow down spending. And if you decrease interest rates, the theory is you should be able to increase spending and also help alleviate or reduce inflation. And so that is why the current administration is trying to pressure the Fed to lower interest rates to help with the inflationary issue that we're having right now, and also to promote spending, borrowing and spending in the economy. But the issue with that is the Federal Reserve is just trying to sit put because there are so many unknowns when it comes to the current state of the economy. And the main reason for that is tariffs, right? The tariff conversation has been like a roller coaster for the last 90 days or so. And each time we are talking about it, it's getting worse and worse. And not only that, it changes from day to day. So there's so much volatility right now when it comes to tariffs. It's really hard to keep your pulse on what's going on because the changes are happening faster than most people can even keep up with. And so because of that, they don't want to impact or change interest rates until they know what is going on and where the dust has settled. So their quote is they're doing this wait and see approach. And essentially, until the administration kind of settles this tariff conversation and put a pin in it, I think the Fed is going to just stand by to see where things go. Now, their main concern is, of course, inflation, right? The tariffs are definitely negatively impacting the price of goods and services. It's causing things, or will cause things, to be super expensive. And when you have high inflation, it then has this trickle down effect. So it then makes goods and services more expensive. So consumers are now not able to buy as much. So they're spending less when they're going to the stores or doing business with companies. And then what happens with that is companies now have reduced revenue. If they have reduced revenue, they need to now find a way to cut costs so they can maintain their profit margin. And most times when companies are reducing costs, one of their biggest expenses is people. So then they people. Now you have people who are unemployed who now can't afford those more expensive goods, and they can't afford to maintain their day-to-day life. So they're now spending less. The companies receive less revenue. They now need to reduce expenses. So it definitely becomes like this circular thing where it's a hamster wheel and you're just going round and round till something happens to stop the madness. So this is why everyone is talking so much about tariffs, because it is going to impact the economy and is impacting the economy in so many ways. I think people are kind of taking for granted what this really means for them and their bottom line. And I think a big reason for that is people haven't seen those increases just yet because the tariffs were just implemented in the last few weeks. So the things you're buying today, they're already here. So they're not impacted by the tariffs. The tariffs are going to be imposed on goods that are newly in the country. And as I mentioned earlier, we just had the first round of ships that have goods that are impacted by these new tariffs. So you are going to see this impact in the upcoming weeks. And in some cases, you'll see a small increase. In other scenarios, you will see huge increases. So we definitely need to buckle up for what's ahead. What else? Okay. Other big thing this week is real IDs. You need a real ID to take a domestic flight. So May 7th was the deadline of where you would need a real ID to go through TSA if you are taking a domestic flight. And so I guess how to put it. So prior to May 7th, what they were saying, meaning TSA, is you would not be able to fly if you did not have a real ID or an alternative form of identification. You would need a passport card, your global entry card, or a green card if you are a permanent resident. So you would need any of those in order to go through TSA. If you did not have a real ID, you would not be able to fly. That was the bottom line. That was being told to us up until May 7th. So now May 7th has come and gone. And of course, now they're kind of backtracking just a little bit. So if you do not have a real ID of any sort, you can still go through TSA with your regular ID. The only catch to that is you may have to go through additional screening when you are going through TSA. So they are advising you, if you do not have any form of real ID and you are taking a domestic flight, you need to give yourself an additional 1 to 2 hours on top of whatever time you would give yourself normally to get to the airport, because you are going to be put through additional. You must give yourself time to go through that screening process so you can still catch your flight on time. So I was kind of surprised. Well, I shouldn't say that. I was not surprised they were giving this new clarification of the process, since there are so many people who just don't have it. And they have some states that have a high rate of having real IDs, and other states have low participation and not many people have the real ID. So at some point they had to kind of find a compromise so that way people can still travel and these airlines can still do business and make money. So that is for anyone who's flying soon, keep that in mind. Again, just to do a quick recap on that, you will need a real ID, whether it's your driver license or state ID, passport card, global entry card, or a green card to go through TSA like you normally would. If you do not have any of those and have just a regular ID, you will have to go through the additional screening process to get through TSA. So keep all this in mind as you are traveling. And this applies for domestic flights only. You still need a passport if you are taking an international flight. So now we're going to jump into earnings calls that happened this week. And I'm trying something new here. So let's see if it's going to work. So the first company that I am talking about today is Mattel. So Mattel, of course, is known for the children toys like Barbie dolls and all of that they make for children. And so they're definitely a company who will be impacted by tariffs. And so they did talk about that during their earnings call. Let's talk about that briefly. So they had their Q1 earnings on May 5th. So their Q1 runs from January to March, and sales are up 2%, but they had a net loss of $40 million. So I am going to try something new here. And I want to share my screen. So let's see if I can do this and it actually show up. Let's see. Can you guys see that? I don't think so. I'm not seeing it on my end. Let me go to Instagram real quick and see if you guys are seeing this. Nope. Interesting. I did a whole practice run of this. Oh, here we go. Add to stage. Sweet. Nope, that's not what I want. Here we go. Okay, fantastic. So here we have Mattel. Um, as I mentioned, they had a net loss of $40 million, which is crazy. Um, I'm trying to see if I can show the financial statements here like I normally. Oh, wait, I think it's up here. Here we go. Here we go. Here we go. Here we go. And I want to. Oh, wait, is it going to let me? I'm not seeing Q1. Interesting. Okay, so I can't show. Oh, wait. Here we go. Maybe I can. Here we go. Okay, so here we have a net loss of $40 million. And so, of course, that's not good for business. And what was interesting about their earnings call is they're being very cautionary on their future guidance for 2025, primarily due to the tariff. So they, of course, will be impacted by this. Now, what they have stated is they are prepared to deal with whatever comes their way. So they have ample cash on their balance sheet, and they also are prepared to offset the cost of tariffs. Now, my concern with that is when it comes to offsetting costs, that usually tends to mean layoffs, amongst other things, right? Companies can find other ways to offset expenses and costs, but people tend to be the first way they go about that. So I think we will start seeing more layoffs as we go through the year, as companies have to find ways to afford to essentially stay in business. Now, due to the uncertainty that they are having because of tariffs, as I mentioned before, they're not really guidance for 2025. So when I say guidance, if you're new to earnings call, usually a company will speak to their plans for the upcoming fiscal year. They'll kind of give forecast on revenue, expenses, net profit, and so on and so forth. So they did not do that for this earnings call. They solely focused on the Q1 results, as well as giving some color around the tariffs and how they plan to tackle them, as that will impact their business this year. So what was interesting is the market did respond pretty well. If we see here, their stock price is up 5% this week, which of course is the week of their earnings call. So Wall Street is happy with their results. Now, even though they were operating at a loss in Q1, of course, their goal is to rebound and change that for future quarters, but it's too soon to tell. Stock is currently trading at $17.24 per share. Now, when it comes to Mattel, they actually do not pay dividends. They haven't paid dividends since 2017. So that's pretty interesting as well. I'm not sure why they stopped paying dividends. I'll have to do some research about that. But that is their latest update. Now, as I am doing these earnings calls updates each week, I'm not recommending these stocks for you to invest in them. I'm not telling you to go out and buy these stocks. These are just some highlights of what happened this week. If you are someone who's investing, you should be paying attention to what's going on in the market. And so that is why I am kind of going over these earnings calls each week of companies that I think may be important to you, or just important to give you an understanding of what's going on in the economy currently. So if you have any questions as we are going through this topic, feel free to put them in the comment section. So the next company that I want to talk about is going to be Zillow. So Zillow, of course, is known for real estate. And this is the site that we all tend to gravitate to when we're shopping for houses, when we list our houses for sale, so on and so forth. And so they had their earnings call on May 7th. Now, with Zillow, they had a pretty good Q1. Revenue was up 13%. Net income is up 13% versus Q1 of 2024, just to clarify. Net income is up quite a bit. Net income is up over 100%. So their net income was $8 million in Q1, and actually was negative in Q1 of last year. So they've seen a lot of financial progress in the last year, and which is pretty good. Now, the stock price, though, it did close at about $68 per share, and it's down about 1% this week. So nothing crazy, but as you can see, the earnings call happened on May 7th. The stock went up a little bit. It tanked, shot back up. So some volatility there, but not a whole lot to speak about. Now, Zillow does not pay dividends either. They've never paid dividends. You can tell that by the forward dividend yield and the ex-dividend date. So this is definitely not a dividend paying stock, in case you were wondering. So the last company I did want to talk about today is going to be Coinbase. So Coinbase, of course, is known for the platform many people use to purchase cryptocurrency or stable coins. And so they had their earnings call on May 8th. Let me close that out. So for them, it was kind of an interesting or mixed bag when it comes to their results. Revenue was at $2 billion. So it's up 24% versus last year, but net income is down significantly. So with Coinbase, their net income is down about 1.2 billion. So it was $66 million this quarter, and it was, hold on, 1.2. Let me see if I can find it quickly here. So while their revenue is up, their net profit is down significantly. So that is definitely concerning as an investor to see and hear. And so let's see if I can find. Nope, this is last. I'm trying to find the current quarter. Why do I not see the current quarter here? Let's refresh that. I don't see it there, but I'll kind of pop it up on the screen. Oh, I can't pop it up on the screen anymore. Oh, shoots. I don't know why I can't see their Q1 results here. If I switch over here. Huh. That is interesting that I can't pop it up. Okay, I will do this so you guys can see it. So you can see how bad things are for them. So this is their shareholder letter that was published with their earnings call. Make that a little smaller. So you guys can see here. Nope, where is the net income on here? I was looking at it earlier and now I can't find it. Interesting. I can't find it on here. Oh boy. All right, so much for that. But their net income was $66 million. I think it's here in the narrative here. Oh yeah, here we go. So net income for Q1 was 66 million, but Q1 of last year was 1.2 billion. So they're down like 94%, which is very concerning. So Coinbase is definitely having some tough times just in Q1. Hopefully they can rebound things for Q2 and for the rest of 2025. So these are the kind of things that I pay attention to as an investor when I'm doing my research. This is the kind of things that I'm looking at. I want to understand. Let me stop sharing and just go back here. I want to understand the company's financial health. I want to understand their stock price. I want to understand their outlook for the year. What do they have coming down the pipeline? As these are things that are important to me as an investor, and it helps me understand whether or not I want to invest in them at all. Do I want to continue investing in them, or do I want to take a pause, or do I want to divest, right? Those are kind of all the options you can consider as an investor. So you might not be doing research to that level, totally understand that, but you should be doing some kind of research before you invest in any stock. So you need to have, I call it an investor checklist. So you wanted to have like 3 to 5 things that you are looking at that are important to you as an investor. Now, what those things are, will differ from person to person. But if you are looking for a way to help navigate that or understand what you should be looking at, I do have an ebook called the Stock Market Investing for Beginners. I'm kind of mixing up two books that I wrote recently. So Stock Market Investing for Beginners. So in this ebook, I do talk to you about investing, and I do break it down in a way that's very easy and very simple to understand. I give you investing terminologies. I also give you some examples of what you should be thinking about as an investor. And I have a lot more things in there as well. So if you do want to get a copy, check out the link in my bio. If you are on Instagram, if you're here on YouTube, I will put a link in the caption down below once I do end this live. So let's see, what else do we have going on there? So I think that's it for this week's weekly recap. I don't see any questions. Now I have to go ahead and watch this replay to see how this streaming went. This is my first time trying this streaming platform, so I can broadcast from both YouTube and Instagram simultaneously. I did try to do this last week. I had my laptop for YouTube. I had my cell phone for Instagram, and it just did not go well. YouTube was fine, but I didn't like the angle of the camera on Instagram. And so I figured I had to find a better way to do this. So hopefully this new platform that I'm trying is my way to do that. So if you are watching this on Instagram, let me know how this streaming was for you on that platform. If you're watching this on YouTube, let me know how this was for you over here. And I, of course, will watch it myself to see how I thought it went. And we will see if we will continue with this. As I mentioned before, I've been going live a lot more on YouTube. I've been going live to do these weekly recaps. I also talk about investing, different topics, pretty much every single week. But I have not been going live on Instagram like at all, essentially. And so I definitely want to give my community on Instagram this information as well. So hopefully this is going to be my way to do that. Fingers crossed. So with that being said, that is it for today's live, guys. Have a great evening. Have a great weekend. I'll talk to all of you next week. Take care.